honestly, it's harder to make numbers work when interest rates are this high. But I want to point out to you that high interest rates are not unusual. What is unusual is for them to stay high for a very long time. I am very obsessed with studying interest rates and Fed actions since the Second World War. Stuff that happened before Second World War was sort of bizarre and messes with our data, so we don't study it. And so when I'm looking at how many times the Federal Reserve has hiked rates since, the Second World War, they've had 9 rate hiking cycles. And so I study each of those cycles and figure out how long do they last. And I've come to this conclusion that inevitably rates go back down. So today, what you have to do is you have to drink that Kool-Aid. You have to believe that rates are going to go down. I don't know when they're going to go down. They might go down a year from now or 2 years or 3 years. But inevitably, rates go down. And there's a lot of economic reasons for that happening. There's a lot of macroeconomics that goes into this, which is an area that fascinates me. So I read about all kinds of different macroeconomics. And what that tells me is that at some point, rates are going to go down. So when you're buying real estate today, you might get a high interest rate and your cash flow might be very low. But you want to make sure that you have a flexible loan so that 2, 3, 4, or 5 years from now, you can refinance. And the moment you do that, that property is going to go from, meh to gold. And that's the real estate strategy that works universally today. I would love to be able to say, well, 4% interest rates, you can make more money. But I want to point something out to you. This is very important. I'm in the multifamily world, also called apartments. And that world is very rational, very logical. It's unlike the single family world that is extraordinarily emotion driven. Because most people that are buying a single family are not making a true investment. They're not sitting with Excel spreadsheets and doing the math on what it is. They're buying a home. And yeah, sure, it has some tax benefits and, over time appreciation will build up, but they're still buying a home. So it's an emotional decision. Multifamily is a business. We're buying a business. So the value of the business depends upon cash flow. And so one thing I'd like to point out to you is, you mentioned interest rates today are high. Well, the corollary to that is prices are low because multifamily prices have dropped by 20% and continue to drop because the value of multifamily is related to the cash flow. High interest rates, lower cash flow, therefore lower prices. So today's situation is vastly better than 2022. I had 4% interest rates in 2022, but I was paying a lot more. A property that I'm buying today for $30 million, well, that same property in 2022 was worth $38 million. So I am getting a $7 or $8 million discount for putting up with today's high interest rates.
If financing felt complicated, you're not alone. Click the video above and I'll show you how to stack your funding like a pro. No stress at all.